Hello everyone, and thank you for tuning into the North Main Minute. I'm Joshua Doby. If you happen to watch business headlines or we're taking a look at business newspaper or anything here over the last week or so, you know that the Federal Reserve Board cut interest rates. Now, I'm not going to get into the full definitions on what that means, but generally speaking, understand that the Federal Reserve is responsible for adjusting interest rates to its member banks. And then that trickles down to the rest of us as the consumers and as small businesses and corporations. It was widely expected that that rate was going to be cut by 25 basis points or about 0.25%. However, they made the move to cut it by 50 basis points or 0.5%. Now that may not sound like a lot, and frankly, you'd be correct. It's not a huge differential, but it certainly took the market, let's say, by surprise in a positive kind of way, meaning that the stock markets like that a lot because the idea being, thinking a little bit linear here, interest rates come down, cost of capital comes down as well. Companies are able to borrow money with less expense, increase in profit margins. That's an overly simplistic way of looking at it, but that tends to be what the market looks at in the near term. So what does that mean for you? What does that mean for me? Or what does that mean for any of us? Well, I'm going to give you a terrible answer to start out. Not a whole lot today. There are going to be some adjustments in terms of what we see in mortgage rates or auto loan rates, but that was already largely baked in or already largely present before this adjustment in the rates took place, primarily because it was broadcast that it was going to happen, just not at the level that was anticipated. So this additional 0.25 percentage point, stock markets loved it in the short term, doesn't necessarily mean that we're going to do anything different right now. It will be interesting to note, though, what the Federal Reserve does in November and December of this year subsequent to this meaning, are they going to continue to cut rates? Then what is that going to mean for us as an economy and cost of capital as well? We'll come on with another update as that takes place. But if you'd like to reach out to us at North Main Financial Group, what does it mean with regards to interest rates? What does cost of capital impact have on your portfolio? Are there things that you should do differently to position yourself in a rate environment which may be decreasing instead of one which is increasing? We'd love to hear from you. NorthMainFinancial.com.